Federal Reserve Chairman Powell spoke at Jackson Hole last week. He really didn't say a lot new, but he did reiterate that 2% inflation is the Fed's goal. Currently, inflation is running closer to 3% on a headline basis and a 4% on a core basis, so that 2% means that the Fed has considerable work still to be done. Several other Fed governors came out and reiterated that as well, that 2% is the goal. So the Fed has definitely put a line in the sand that says 2% is our inflation goal. Now, one of the reasons that inflation has taken off is that the Federal Reserve balance sheets has exploded. It went from $800 billion in 2008 to $8.9 trillion at the beginning of 2022. It's down now closer to $8 trillion. And the Fed has said that they're going to try to reduce the balance sheet by about $1 trillion a year to try to get it back in line. What has occurred as the Fed did this massive balance sheet explosion is that it managed to finance the U.S. federal debt at relatively attractive and low rates because they were buying bonds at really below what market interest rates would have dictated. And so the Fed actually used that the federal government used that to advantage and, went on these wild, spending sprees. First with the financial crisis where they bailed out most of the major banks and financial institutions and kept them from going bankrupt, basically gave them money. And secondly, with the big COVID crisis, where here again they basically shipped out money and stimulus checks, and also with paycheck protection policies, which were basically big giveaways to the public. But those two events caused the federal debt to explode at a exponential trajectory. We're now running deficits around $2 trillion a year. We're approaching interest rates only of about $1 trillion in expenses a year. And that's going on top of our $32 trillion in debt. I think it's up to $33 trillion maybe in the very near future. And we basically have gotten to a point where the federal debt is a big problem. We did a long video on this a few weeks ago. If you did not see it, take a look at our website and take a look at the American debt crisis. And we do give you a lot of details on that, probably more than you would like. But take a look at that if you are interested. But the main thing out of Jackson Hole was an interesting paper called Living with High Public Debt. So basically, this was put together by the Federal Reserve, and it is interesting in that they're basically admitting that the U.S. government debt cannot be rolled back. They throw out a few possibilities that historically would have worked to roll it back. Budget surpluses, which, as we all know, are not politically possible. The second one is having interest rates below the growth rate, which helps. And we basically had that situation for a while, but that still didn't seem to be a meaningful impact. The other item was financial repression, where you basically keep interest rates below market basis. And the Fed has been doing that to a significant extent as it ballooned its balance sheet. And interest rates are starting to get closer to market prices. Historically, the 10 and 30-year Treasury have been at about nominal GDP. Let's say that nominal GDP is 5% made up of 2% real GDP, 3% inflation, and you get to 5%. So we're getting closer on the interest rate basis, but we've still had some financial repression, but that has still not managed to keep the deficit and the debt from growing. And then the other alternative that has worked in some places in the past is using inflation to basically bail the government out of its debts. And that really only works if the inflation is unexpected. So this goes back to why the Fed is so adamant about telling everybody that the inflation rate is going to come down to 2%, and that's their mandate. So they're going to continue to push that and try to do their best to get it down. But the only way the government can make any progress on the deficit and the debt levels would be for inflation to be substantially above expectations. and they need to bring down that expected inflation rate. That's why they are so adamant about saying 2% is our goal, so people will start to say, okay, maybe that'll happen. They'll buy bonds at a rate expecting 2% inflation as opposed to 3 or 4 or 5% inflation. And then if you do have inflation, that will help with the federal government finances. So it's a long-winded way of saying they're basically trying to convince you to believe that inflation is going to be 2%, so you'll help finance the government debt at a rate that is confiscation of your capital, because the inflation rate is actually going to be run above 2%, meaning you're not going to be getting the real return that you expected. So the Fed has basically has helped finance the federal government to date. They're continuing to have rhetoric that will help with that financing issue. But the bottom line is the deficit and the debt is out of control in the U.S. government. Even the Federal Reserve knows that. They're trying to figure out how to best help manage that situation, but they're spiraling out of control. It is very unlikely that the debt levels don't break $40 trillion in the very near foreseeable future, and probably continue to move upwards from there. So we have a big debt problem. That debt problem will probably result in some sort of inflationary dynamic at some point. Eventually, the Fed is going to have to finance those bonds with cash, which is inflationary, and at that time, we're going to see inflation really spike. But they're going to do their best to convince you that that's not the course of action that's going to take place. Don't be fooled. In my opinion, inflation will be dramatically higher in the out years, and your bonds are going to be not very good investments, and even your cash in real terms and real purchasing value is going to deteriorate as inflation moves up. So that's my thoughts about the Jackson Hole. I hope you guys had a great summer now that we are winding down, and I hope you enjoyed your summer. This is Ben Halliburton. This is Building Benjamins. Please take a look at our website where you can sign up for text and email alerts, and also see our full disclaimer where we explain that this is not specific individual investment advice, but merely our own opinion. Hope you have a great day. Thank you.